Well, good morning and welcome to this week's edition of our Ideal Trading Lifestyle Spotlight session for Wednesday, September 5th, 2012. Again, good morning. My name is Randy McMullen, and I am the market analyst for Ideal Trading Lifestyle and will be your host today in delivering our weekly session. This session, we review our most current Ideal Trading Lifestyle tracker, which is a review of all of our most current 90 days and picks, looking at where we are with respect to the S&P index and the TSX, whether or not we're meeting our benchmarks of accuracy. The next thing that we do is we typically go into our actual trading account. So here we look at a summary of how a client's portfolio has been building, and we review our current portfolio, which was $15,000 that we started in January 2011, just to see how we're growing that portfolio. Then we want to leverage into some economic reports. Here we're looking essentially what's going on in the U.S. with respect to key reports that are coming out and discuss potential impacts in the market. This will allow us to leverage into our market sentiment review, which is really a technical analysis of both the S&P and the TSX. Here we'll also discuss the economic reports, some of the current key news items that are going on throughout the globe and their impacts, where we're seeing from a technical side with respect to the markets. Then we'll discuss some community news. Here we're looking at our client mailbag, some training tips, as well as upcoming events for Ideal Trading Lifestyle. And finally, a call to action. Those that are listening on the line, what we typically do is we invite them to ask questions, and if they've got any questions, they can either take the mic over or perhaps just type them in. At the same time, if you're listening to this via video link, what we do is we encourage you to send us any questions that you might have that you would like us to discuss in a future Ideal Trading Lifestyle Spotlight session to make sure that we're answering those. This way you don't need to be in attendance. You simply need to be able to review the video link. And finally, a call to action. So any items that we've discussed that you would like to see some further clarification on, or perhaps just a review of some of our additional products and services offered through Ideal Trading Lifestyle, and mainly in the areas of our continuous learning and how we're taking our clients and moving them up the ladder. Okay, so first things first, we get started. We typically like to make sure that we invite all our clients that are in attendance to just give us a hands up, confirming that they can hear okay and that they can see the video. So here what we're looking for is just a confirmation that we're A-OK with respect to clients being able to hear and watch the video. And that's good. All our clients are giving us a hands up, which is excellent. Okay, let's have a look at our most current 90-day scenario with all of our traders picks. These are the picks that we've been posting now in our Ideal Trading Lifestyle site for all three memberships, which is US, Canadian, and ETF. And typically what we're looking for here is, again, we're wanting to make sure that we're hitting our minimum 80% benchmark of accuracy. We want to see how we're comparing to the overall markets and discuss some of the key items that we see with respect to this tracker. So what we've got here last 90 days is we're looking at from May the 31st to August 31st. We're up 15.58%. Typically, though, the S&P is up 10%, so we're definitely beating the overall benchmarks. And what's important to understand here is that what we're generally seeing is that when the markets are in a positive uptrend, that's when we're getting a lot of picks. That's when we're seeing a lot of success. And when we see the markets into a downtrend, here we're getting involved in perhaps inverse ETFs, so that's profiting when the markets are declining. Or perhaps we're sidelined with our U.S. and our Canadian picks, just waiting for things to turn around. And so the important thing here is that we're also hitting our benchmark of accuracy. And you can see that out of 64 pick days, so these are 64 picks that we have identified within the last 90 days across all three memberships, we've had 44 of them filled. That means out of the 64, 44 of them have actually dropped and hit their buy, sell, and stop loss strategy. And so essentially what we're looking for here is we're looking for, again, making sure that we're seeing that benchmark of accuracy. Also, out of the successful picks, we had 7 that stopped out. So again, looking for a minimum 80% accuracy with respect to our success rate, and you can see that we're well ahead of that. And we have 1 pick that's still open. So the key here is that, and we always allude to this, is that we did have 7 picks that did stop out. And what that simply means is that of the 7 picks, those hit their stop losses, and we recommended that clients actually get out at that particular point in time. So essentially, to be successful at trading in these markets, you need to make sure that we have a very sound and non-emotional strategy for getting in, selling, either at our target prices or if a stock does go the wrong way. Okay, so let's just have a brief discussion on that. And so what we've got here is our monthly trading account summary that started in January 2011. And we put $15,000 into a TFSA. And so essentially what we're seeing here now is we're seeing since January 2011 almost a 45% gain in the portfolio. So that means is that if you've been following our ideal trading lifestyle picks, buy, stop, and sell prices, and our position sizing, meaning that we're minimizing exposure in the markets during times when we're unsure, then what you're looking at essentially is that $15,000 as of last Friday would be worth $21,742. So it's a nice, almost a $7,000 gain that we've realized on $15,000, which is excellent considering where the markets have been. So that being said, what we also like to draw your attention to here is some of what's going on with respect to the portfolio gains. And the important thing here that we always want to allude to is that we have had some great months with portfolio gains, and we've also had some months where we have had some losses as a result of that. But what you're seeing here are consistent gains over the long term. And the important thing here to understand is that Ideal Trading Lifestyle is a long-term trading strategy. It's not something that's based on 1 month or 2 months. It's based on a long-term strategy. And you can see we came off a very weak month in August where the markets were extremely flat, and our portfolio actually declined in the month of August. But what you're going to notice here is last year in the month of August, we saw something quite similar happen. We had a decline. The summer months are very slow, and so we try to stay sidelined as much as possible, making sure, however, that we are promoting some picks. But look what happened last year in September and October and November and December and even January. We went from, in last August, a negative 2.38% portfolio loss in the month, but you can see that we had a gain in September, a big gain in October, a gain in November and December and January. So you can see it's quite typical of what we realized again this August. So essentially, so for clients getting involved, looking at where they're headed, you can see that history is showing us that we typically see some weak trading because of lower volumes in the summer months. And that's important to understand, even though we did do okay in the month of July. But you can see coming into the fall is when we see the market starting to improve. That being said, however, we're still promoting a very solid 45% gain on clients' money since January 2011. So I just wanted to spend a few moments and speak to this, because any trading strategy needs to take into consideration potentially portfolio losses, not just the gains. And if there's any strategy that tells you they're 100% accurate, that's an impossibility in these markets. The key here is knowing how to manage your portfolios, and you're showing consistent long-term gains over a long period of time. And that's what Ideal Trading Lifestyle is realizing for clients. Okay, let's discuss some of the economic reports that are coming out this week. You can see that on September the 4th, which is yesterday, we had the Institute for Supply Management Index come out, and that came in at just a little over 49, and you can see was just a little bit less than what they had expected. And so what we're seeing is just a little bit of weakening in the market. We also had the construction spending come out, and you can see that actually that did come out at a loss when we expected that it was actually going to come out at a slight gain. So with construction spending dropping, tells us that we could be in for some weaker times in the economy. September 5th, we have the productivity review coming out. That came in at 2.2%, which was higher than expected, which is excellent. And tomorrow we've got the ADP employment change report coming out, which is a critical report for us. We're going to look at, have there been an increase in employment numbers in the U.S.? We're also looking at the initial jobless claims that are coming out on September the 6th. And typically, here again, what we're interested in, are we seeing an increase in unemployment insurance in the U.S. For the previous period? And continuing claims also comes out, which is the total employment. We've got the ISM services coming out as well, and the unemployment rate coming out. So here what we want to make sure is that we're not seeing an increase in the unemployment rate in the U.S. But overall, we're seeing some weakness in some of the key reports that are coming out, looking at spending that's going on. Manufacturing is a little bit lower than expected. And so all of this is pointing to essentially some lateral trading in the markets, which is what we're realizing. Okay, and let's just now have a look at this and how this relates to the overall market sentiment picture and a technical analysis of the U.S. and the TSX. So typically what we're seeing is in the U.S. For yesterday, September the 4th, you're seeing how we're unable to now break through this existing 52-week high with the S&P, and just seeing some overall weakness there as well. You can see how we've dropped below that, looking for a confirmation of support now at this particular trend line, which has been in place since the beginning of July. So this is a key line for us. If we do drop below this line, there's a pretty good indication that we're going to start to drop and hit the 1375 mark on the S&P. So this is one of the reasons why we've been extremely cautious on the S&P going forward. We see us hitting 52-week highs, and on the same note, we are into some sideways trading, seeing some weakness in the market. You're now into what we see here is, which is a flat bullish market that's undercrossed, which is telling us that we are looking for a confirmation of support on the S&P. Looking at the TSX now, you can see also we pulled away from channel highs and are looking for a confirmation of support at this level, and we're into a declining bullish market that's undercrossed. So we're very cautious with the TSX as well going forward. Okay, let's just look at now one of our client questions that came in earlier. And the question is, how do I exit a stock that is closed below its stop price? Now, one of the things that's really important here is we obviously want our clients to be successful at trading in the markets and to realize overall long-term gains in the market. The challenge, however, is that in order to be successful, we need to understand that we are going to realize some stops, which means some stocks that have declined and we need to get out. The important thing here is that if you're an Ideal Trading Lifestyle client, that you see a stock closing below its recommended stop loss price, what we suggest is that we recommend that you sell that stock the next market day. And here's how you do that. You go into your online broker, whether it be Questrade, Interactive Brokers, any of the major banks, virtual brokers, enter a sell order at market for the number of shares that you own. And what that means is that market simply means that you are going to sell that particular position right at market open. And so that's what we recommend to Ideal Trading Lifestyle clients. Now, for clients that have been through our basic and our advanced trading courses, we have a little bit different strategy that we recommend. It involves a little bit of trending on the charts, looking at where the futures are pointing, and possibly looking at somewhat of a rise in that particular stock that morning. But for our clients that are really just interested in buying and selling our Ideal Trading Lifestyle picks, this is what we highly recommend. Okay, one of the training tips that we'd like to discuss today, and it has been a key question, is really understanding the difference in market sentiment. So when we post market sentiment, it's either going to be a neutral or a caution, or perhaps even a buy. And let's just talk about the difference between a neutral market sentiment and a caution market sentiment. The important thing here is that when you're utilizing the position sizing calculator where your portfolio size has been entered, the difference between the neutral and the caution is extremely important. A neutral market sentiment simply means that the existing trends in the markets are expected to continue to follow what they're doing. And so what that means is that we're saying that you're going to get into the market and you're going to utilize the maximum percentage for investing your portfolio in any one position. That's important to understand. When we look at a caution, it simply means that you're going to look at about a 50% reduction in your position sizing, allowing for entry into the market, because we're suggesting that you reduce your exposure in the market, ensuring your portfolio can still meet the minimum share requirements. Okay, so we wanted to cover that off. It's quite important to understand the difference between a neutral and a caution. So if we see for example, the stock futures pointing to a lower start in the morning, perhaps some issues going on in Europe, we may be changing picks that were a neutral to a caution, and what that means, there will be an adjustment in the buy, sell, and stop loss pricing, but it also simply means that we are typically looking at a reduction in your exposure for your portfolio. And so we recommend that you complete the position sizing that morning, making the adjustment on your buy order. Okay, what I've got here is just an example showing our position sizing calculator with a neutral market sentiment. You can see how we've chosen neutral here. And so essentially we're looking at the maximum gain based on the category that we've selected. And so we're looking at about 1,050 shares that would be recommended to purchase as a maximum for this particular position. If we changed it to a caution, you can see that that has now been cut down to 640 positions. So essentially what we're looking at is a big reduction in the amount of positions. Again, we're seeing a caution. We're not suggesting you don't get in the market, but we are suggesting you actually minimize your exposure in the market by purchasing less shares. Okay, so that's how we help manage our clients going forward. We look at a caution also means a revision in a buy, sell, and stop loss pricing, as well as the overall position sizing. Okay, we have some key upcoming events that will be approaching soon. In Winnipeg, September 12th, we have our live fall boot camp sessions. That'll be from 7 to 9. Saskatoon, October 4th. Edmonton is October 23rd. Calgary is October 25th. And Regina is November 21st. And so if you're a client that is residing in any of these areas, we would love to see you at our sessions. These are live sessions. You get involved in the community that's in your area, and you can take advantage of additional learning. If you're unable to attend the session, you can still register, as we will be providing a live GoToMeeting as well, so you'll be able to attend it live online. So you can register for those sessions directly in the community news area. We also have our upcoming options online refresher training, and you can see tomorrow night at 8 o'clock we have one for our options clients, and in October, November, and December. Okay, so again, we'd like to now open this up. If you've got any questions at all, any items that you'd like discussed that perhaps we haven't discussed. For those that are listening via video link, again, obviously you can't submit your questions at this time, but you can email them or contact us direct, and we'd be more than happy to make sure that we add this question to our next Spotlight session. Okay, we don't seem to have any clients asking questions. I know the question that we answered before was one that did come up in the session, so it's interesting how we had already put that in here. So I just want to thank you for asking that question, and also trust that we responded to it in the way that you would want to see this response. All right, so on behalf of Ideal Trading Lifestyle, my name is Randy McMullen, and I want to thank each and every one of you for attending our session today, and those listening via video link, and want to encourage you to just give us some feedback how you're finding these sessions. Want to make sure that you're finding them valuable, you're able to take knowledge from here and move that forward into the markets and see the profits that you're looking for. So on behalf of Randy McMullen and Ideal Trading Lifestyles, we want to thank you. Have yourself a great market day.